My name is David White. I'm a financial trader here at Spreadex. I think that it would be a very, excuse the pun, but it would be a very crude way of trying to hedge your exposure to your bills or how much you're paying in fuel. The wholesale cost of NYMEX or Brent crude is invariably tied to the cost of fuel, but you could have fuel prices tend to move in a much less volatile fashion than the daily price action of crude deliverable for the next quarter. So if someone's looking to hedge their fuel costs driving a family car, I think it could be quite a risky way to try and embark on that. If, however, you are of the opinion that maybe there's some dollar weakness surrounding crude being denominated in dollars, and you believe that perhaps that the demand is increasing or supply is diminishing, then you could take on a long position on Brent crude and look to play that. But with respect to hedging in oil futures is really reserved for things like airlines, who deal in enormous amounts of fuel, and they're able to. I mean, that's why futures exist. Futures first started in rice many years ago, and that's why they exist, for big organisations to offset their risk to the market, rather than somebody in retail who can do, let's say, £1 a point of NYMEX at maybe $90, which is about a £9,000 consideration trade if you're trading in sterling. I mean, what can the retail investor achieve from that? It could be quite volatile, and I don't think you'd be able to sort of get that hedge. I would say that volatility, I mean, the greater the time horizon, the more opportunity there is, or the likelihood of the price moving increases. You just have to look at the options market to find that out with time value. It really depends on the news flow. So if there is significant news flow coming out on something like oil, then participants will look to try and incorporate that new information, and prices can move very quickly. You could see, I remember last year there was a time when oil prices, Brent, were moving around $4 to $5 a day, and even more than that. And if you were short that market £1 per point, which is the smallest we do, you would look to be offside maybe £400 or £500 on any given session. So really the scope for something like NYMEX or Brent crude to move by more than $10 in a month is quite high. But the option market will give you a good idea of how much volatility is expected, how much the market is pricing in forward volatility, because options will become more expensive the more the market believes the likelihood of volatility is to increase. Okay.